So here's what just happened. While Donald Trump was in Beijing, hat in hand, asking Chinese leaders to invest in America, investors managing nearly $1 trillion in assets made a really important decision. They picked Canada, number one in the world.
Not second, not close, number one. Canada just displaced the United States of America as the world's most attractive destination for infrastructure investment. Germany came second, and the US, the country that has spent 80 years insisting it was the only safe place for serious money, it came third.
And the reason this matters far beyond a survey ranking is that the people who made this call, they don't move money based on politics or sentiment. They move it based on decades-long risk assessments. And their assessment of America right now is too dangerous, too unpredictable. I'll pass, thank you.
So we're going to show you exactly what that means for Canada, for the United States, and what comes next.
The survey was run by the Global Infrastructure Investor Association, the GIIA for short. And we want to be clear about what kind of investors we're discussing here. These are not day traders, they're not hedge funds chasing a quarterly return. These are pension funds, sovereign wealth vehicles, and infrastructure managers who commit capital for 20, 30, 40 years. The kind of money that builds ports, power grids, nuclear facilities, and continental rail corridors.
These are fiduciaries. They answer to pensioners and institutions. They have legal obligations to find safe, credible returns over long time horizons. When they move, they're not making a political statement. They're making a calculated judgment about where the world is going.
And for the first time in this survey's history, they ranked Canada first, Germany second, and the United States third.
Think about that for a second, Dave, because this signals a massive shift. The conventional wisdom built in global capital markets was always, when in doubt, America. The market depth, the currency reserve status, the legal framework, the sheer size of the U.S. economy. It all added up to what traders call an automatic premium. You didn't have to justify putting serious money into the USA. You had to justify not doing it.
Now, that premium is gone. It's not eroding, it is gone. And the people who revoked it are not Canadian politicians celebrating a win. They are fund managers in London, Zurich, Singapore, people who answer to boards of directors.
And they're now saying this: Canada, you're number one.
Yeah. So, what happened to America? Because the U.S. didn't lose this ranking because Canada had a great week. The U.S. lost it because Trump made it expensive to believe in America long term.
Look at what these investors are measuring. Political gridlock so severe that basic budget agreements become hostage negotiations. A national debt so large that the interest payments alone are now one of the biggest line items in the federal budget. They're crowding out the very investments that would make America competitive.
And then the bond market. Bond traders are not alarmists. They move slowly and they speak in signals. And the signal coming out of the U.S. bond markets is not comfortable. When borrowing costs rise because creditors start pricing in political instability, well, that cost lands on every single project, every capital commitment, and every long-term bet on America.
Add tariffs on top of that. Listen, investors committing money for 30 years need one thing above everything else: stable rules. When a president can rewrite the term of trade at any moment without legislation, without process, and purely on executive impulse or a bad sleep, that's not a stable rules environment. That is a liability.
And the survey named this directly: domestic uncertainty, political gridlock, skyrocketing debt. 3 simultaneous reasons to route capital elsewhere. And the cost doesn't show up in one dramatic crash. It shows up quietly and slowly in higher borrowing costs, delayed project commitments, capital diversifying away from U.S. markets without anyone announcing a thing.
And then the irony of ironies. While serious global money was quietly choosing Canada, Donald Trump flew to Beijing. He walked into the capital of the country that he spent years calling America's greatest threat, and he opened the door to Chinese investment. He went to Beijing to beg for capital, while lecturing Canada about being soft on China.
Let's call that what it really is. It's a confession about how bad things have actually gotten.
Canada didn't win this by accident. Investors are looking at our country and seeing something they can actually price. Stable rules, democratic institutions, and a government that is at least trying to build instead of just yelling into the void.
The Carney government's pitch to global capital is built on turning Canada's natural advantages into actual project pipelines. Literally. Energy exports that allies now treat as national security priorities. Critical minerals like lithium, cobalt, nickel, that the entire battery and defense industry is desperately short of. Ports on 3 oceans. Nuclear expertise that most countries would spend a generation trying to replicate.
And then there's the Major Projects Office, the federal mechanism designed to cut through bureaucratic delays and give investors what they actually need. One clear contact, defined timelines, known approval processes, and certainty that a project won't get killed midstream by red tape.
Because here's what long-term capital actually needs. Not a guarantee of perfection, but a map. Show them where the projects are, who's in charge, when the permits land, and then the money moves. Canada is getting closer to being able to show everyone that map.
There's also something less quantifiable but equally real. Canada has a reputation for not treating its allies like tenants. In a world where supply chains are becoming shorter, more political, and more bilateral, that reputation commands a price. And right now, Canada is cashing in on it.
Now, we also want to address the China question directly here because it will come up and it does deserve a clear answer. There are legitimate concerns about Chinese involvement in Canadian infrastructure. Connected vehicles, data networks, strategic minerals, port logistics, all those things. And those are real security risks that require serious attention. Canada has made mistakes in the past, and it has to be sharper going forward.
But let's be equally clear about what's not a legitimate argument. Taking instructions from a Washington that simultaneously warns Canada to keep China at arm's length while their own president is in Beijing actively courting Chinese investment.
Canada reduced tariffs on a limited volume of Chinese electric vehicles. In exchange, China dropped tariffs on Canadian canola and lobster. It's not a surrender. It's a sovereign country making a calculated trade call in the interest of its own agricultural sector. It's called trade management, Don.
A serious country makes its China decisions based on its own security assessments, its own economic interests, and its own values, not on American bullying and not on Chinese pressure.
A ranking is a moment of credibility. Delivering on it requires a pipeline of real projects with real timelines.
The countries that build leverage for the next generation will be the ones who built systems that made them harder to pressure. Infrastructure is how that gets done, and that is Carney's goal.
Yeah, we can see him doing it now through the Major Projects Office and all the other MOUs he's signing and things that are getting done here at home.
So let's come back to where we opened. Donald Trump went to Beijing to court the country he calls America's greatest rival, while investors managing nearly $1 trillion in long-term capital quietly rank Canada the #1 destination in the world. Canada first, Germany second, USA dropped from 1 to 3.
And this is a good look into what the next decade is going to hold. Not because everything is working here, it isn't. Permitting is too slow, interprovincial barriers are still real. The project pipeline needs to become visible and credible and fast. But the credibility, it exists. The assets are real, and the stability premium that America just gave away, well, Canada now holds it.
So the question isn't whether the world is moving toward Canada. The survey already says that. The question is whether this government can convert a historic moment of credibility into a generation of genuine national strength.
So we'll be watching this closely because what happens in the next 18 months to 2 years is going to be really critical to where Canada sits on the world stage.
So we want to hear what you think. Do you think Canada can actually deliver and turn this ranking into real projects, real jobs, and real leverage?
Or does Ottawa just celebrate the headline and then lose the moment in bureaucracy and delay?
And if this got you thinking, share it with someone who you want to have this conversation with, and don't forget to give it a hype.
And if you want to help support the channel, make sure to check out the pinned comment down below, check out the merch store, or join the A-Team. Everything is appreciated here, and we love connecting with our audience.
Thanks for watching, everyone, and we'll see you tomorrow.
Ciao for now.